Meta is down 35% from their highs. I was a buyer at $88 in 2022, and I'm a buyer today. In this video, I'm going to be going over my high five snapshot that tells me when to buy and when to sell. Let's get into it. Here we got Meta up on the high five snapshot. You can see the price, spiked recently, and then it's come back down to about $510.45 is where we closed today. It's a $1.3 trillion market cap. We have a free cash flow margin rate for the next 5 years of 35%. They're doing well over that right now. And then we have a 38% free cash flow margin rate over the last 5 years of this overall 10-year analysis at about 38%. And like I said, they are close to about 38%, so it's growing a little bit. Discount rate's 10%. Terminal value, multiple free cash flow is essentially 22.5, and they've been historically over 30 on their free cash flow multiple. So that is also very conservative in my opinion. Is going to be a free cash flow printing machine, a dividend machine over the years to come. Revenue of $164.5 billion on a trailing 12-month basis. Free cash flow of $54.1 billion. 16.7 of that is basically annexed due to stock-based compensation. And then they have a net cash positive over net debt of $49.8 billion, almost $50 billion, with $2.5 billion, 2.5 billion shares outstanding. I have their revenue growth rate going from 20% down to 15% for this year, 2025, 14%, 12% for 2027, 7%, 10%, 10%, 6%, 6%, 7%. Very conservative in my opinion, because I think they'll be actually able to grow a little bit faster than these numbers. But I want to be conservative, have conservative numbers in here, and let my high five snapshot tell me exactly where I should be buying this name. Their free cash flow yield right now is a 4.19%. Their forward free cash flow yields over 4.46%. Their EPS for this year was 23.92, and then their forward EPS is going to be about $25.24, and that puts them at about a 21 current PE and a 20 forward PE. That is insanely cheap, and just stupid cheap. And that is exactly why I'm a buyer of Meta right now. I am a buyer of Meta because you get all of social media. You got Facebook, you got Instagram, you get WhatsApp, you get Oculus, you get the Meta Quest, which is Oculus. You get the Ray-Bans with the glasses in them. They're working on making those into basically the future, and replacing phones. They had their big Apple moment, in my opinion. And they got LLMs. They're getting into AI. They got the metaverse. If that pans out, they just have so many great products. They have such a wide moat, and they're just an ad juggernaut. So many people don't invest in this company and haven't invested in this company over all these years. That has been a big mistake. That they haven't invested in them because of the only ad business is why they said, well, they only get money from ads. Like, okay, cool. They print money from ads. They have over half the world's population on their devices. On Facebook, on Facebook, on Instagram, all of it. Crazy. 3-point-some billion users across the United States. Across the world. 3-point-some billion users across the world. And they're still growing it. They're still growing the amount of time people are on their apps. It's insane. They haven't even monetized WhatsApp yet either. So, the moment you've been waiting for, I have a $722 intrinsic value, so fair value. So $722 is what they should be priced at today, is what they should be worth today. But their stock price is down to $510. Well, that's because of macro, tariffs, all this other jazz going on in the environment right now. But I want to buy companies at depressed prices. I want a dollar cost average into them. And I actually have a strategy to invest in these companies. My strategy to invest in these companies is essentially I want to buy at 20% margin of safety, which is right here, $577.93, down to 70, 80, 90, whatever, percent margin of safety. Now, here's the thing. my 50% margin of safety, $361. I don't believe they actually get past $361. Or actually, sorry, I don't believe they get down to 60% margin of safety, down to $289, because that would be all the way down here at this lowest level that I believe they could go to on a technical standpoint. What you have all this support, but before then you have this key previous high from 2021 before they cratered down to $88, which I was buying and buying all the way up, buying all the way down. Now I have a better strategy to essentially buy in lots when the price is really good and really undervalued based on my high five snapshot. And like I said, I really think, based on the Williams percentage range and the RSI, the lowest it's ever gotten was at $88 at 25.76 on the monthly chart. To get down there, I believe that they stop right here at this 335 to 385 level. So essentially, my whole thought process is I want to have a full position built out at 50% margin of safety. If it goes below that, then I'll just add more to my overall position that I built out. So if I want $10,000 in Meta, then I will go ahead and buy, and this is how I do it. I wait till 20% margin of safety. At 20% margin of safety, I buy 10% of the position I want built. So I buy 10% of $10,000. At 30% margin of safety, I buy 20% of the overall $10,000 investment I have. At 40%, I go ahead and buy 30% of the overall margin, the overall $10,000 position that I want built. So 30%, 20%, and 10% give me 60% overall position of the $10,000 that I've built up. Then if we get to 50%, I then come in with a 40% buy of my overall $10,000 investment. And that gives me 100% of my investment in my capital that I want invested in this company, gives me 100% invested into Meta at that time. Guess what? If we go to 60%, 70%, that's just going to be crazy. And then at that point, I'll just start adding, I'll just start buying, continuously buying at that point, DCAing at that point like crazy, and building the position up until, I feel that it's warranted. I'm not going to oversize it so much in my overall portfolio. But here's the thing, guys, we get down to 60-70% margin of safety. That is absolutely insane. I mean, we're talking about $288.97 for Meta. That was just what they got to a high of $740. That's just insane. That's just insane. That the math wouldn't be math in there at all, guys. For a company that's the dominant social media. Yeah. It just wouldn't make sense. So that's my strategy. So right now in my portfolio, this new portfolio that I'm building, running this strategy, I am at we hit 30%. So I'm in 30% overall. So I bought 10% at 20,000, and then I bought another 20% at 30%. Sorry, about 10% at 20%. No, it's confusing. 20% at 30%, so 505, which we got down to. So now I have an overall 30% position built. 10%, then 20% gives me 30% of my overall position that I want built. And yeah, I just hope it keeps going lower, guys. I really do. I hope it goes down to 433. Hope it goes down to sub 400, and I'll just keep buying this thing in these lots. And yeah, and how I do it is I have all these companies here that I'm invested in. I have a pool about 12. These are them down here. I'll make videos on them consistently. Let me know which one of these stocks you want to see a video on next. Amazon, Google, Microsoft, Nvidia, Tesla, American Express, Visa, S&P Global, PayPal, Booking Holdings, Disney, Hims, Oscar, Baba. I already made some videos on some of these, but let me know which one you want to see next. Run through the high five snapshot and where I'm at on my buying journey. I call this stuff out live in my high five community. We have trading, we have investing. It's where investing and trading meet. If you're interested, links in my bio. Hope you guys enjoyed this video on why I'm buying Meta. I want to make it really quick and simple. and why I'm buying, where I'm buying, how I'm buying. And then we don't have to worry about all this current margin of risk until, you know, we start seeing above $800 per share. And then at this point over here is where I put in more rosier assumptions. And then I don't sell in these lots, 10%, 20% of my positions until we start hitting some of these numbers. But as you can see, you know, based on the discounted cash flow, you know, where we're expected to get basically 13% annual CAGR at current prices right now over the next 10 years, 13% per year returns, which beats the market. And then over the next 10 years on an EPS basis, you know, we're getting about 17.5% growth returns over the next 10 years, which is just phenomenal. And you see it's a buy today, and it's a continuous buy except for 2027. But that's because of lower PE. And but majority it's a buy across the board. Discounted cash flow model, EPS, PE model, free cash flow model, yield, you know, left, right, and center. Meta's a buy, and that's why I'm buying it. Of course, not financial advice. This is just what I'm doing, my portfolio. If you like these types of videos, let me know in the comments down below. Let me know which one of these you want to see next, and like, follow, subscribe for more. And appreciate all of you guys. Have a great day.